everyone, welcome back to the Attract Capital webinar series. I'm your host Sarah and I'm here with Dave Barnett, founder and CEO of Attract Capital.
Hi everybody.
So thanks for tuning in. Today we're talking about middle market loan pricing trends. So can you start by giving us a little context about what's going on in the middle market right now?
Sure, Sarah. So there's a tremendous amount of capital in the middle market right now. That includes bank loan departments, it includes mezzanine lenders, it includes private debt funds. And the loan prices have just really come down in large part because there's just so much capital that's out there. For example, asset-based lending right now, the all-in interest rate is between 2 and 3%, which is historically as low as it's ever been. And even for cash flow-based bank loans, the interest rates are between 3 and 4%, which is extremely low based on historical standards. Mezzanine loans, on the other hand, really haven't moved that much. They're still at around the 12 to 15%. They're more reflective of the fact that I think mezzanine lenders are investing more at the equity level and doing more structured equity type. But all lenders right now, they're flush with capital, particularly in the middle market. They're looking for deals and they are all actively lending and very responsive to good companies seeking capital.
Mm-hmm. So obviously this is probably very subject to change based on what's going on at any time. So if the Fed is raising rates really aggressively, do you think that prices are going to go up as well?
Well, I think they will go up, Sarah, but I don't think they're going to go up basis point for basis point, which is to say that if the Fed increases rates 9 times, as JP Morgan is suggesting over the next 2 years, that'll be about, each rate hike will be about 25 basis points. So that'll be 2.25 percentage that they'll raise interest rates. I don't think these middle market rates are going to go up that much. I think the middle market rates might go up from right now. If you look at the rate that the SOFR rate, the secured overnight funding rate, if you look at the SOFR rate, which has replaced LIBOR, it's now at like 0.22, and 2 years out they're saying it'll be about 2%. So whereas I think the Fed rates are going to go up around 2.25 to 2.5, I think the SOFR rate, which is the relevant benchmark for middle market lending now, will only go up about 1.75. So I don't think it will definitely go up, but it's not going to go up that much. But if you're talking about going from like a 3% rate to like a 5% rate, that is still historically very, very low. So it just speaks to almost how unnaturally low the rates are right now, which is great for a borrower.
Would you say it's a good time to be a borrower right now?
I think you hit the nail on the head, Sarah. It's a historically golden time for a borrower to be looking for financing because these rates are kind of gobsmacking. Like when I'm talking to the banks and they're saying, well, we can come in at around 2%, 2.5%. I'm like, all in interest rate? And they're like, all in interest rate. I'm like, okay, well, that's a really good rate. So I think it's just a fantastic time for borrowers. And I think it reflects the fact that most middle market lenders for the last 2 years, they've been struggling to put out capital. During the first year of the pandemic in 2020, the PPP loans came in, companies used them, put them on their balance sheet, used them to pay down debt. And then last year, there just wasn't a lot of activity as the pandemic was sort of sorting out. So I think this was the year that a lot of banks and a lot of lenders, a lot of debt funds and mezzanine funds are really focused. So there's a lot of capital available. And I think it's a great time. So if you want to refinance, if you have higher cost debt and you want to take it down, we're working with a client right now. They've got about a 9% all-in rate. We're going to help them take their rate down to about 3.5%. That's a huge win.
Wow. Yeah.
Or if you want to do an acquisition and you want to deploy more capital in your business and invest in your business model, I mean, there's a whole lot of things that are profitable things to invest in terms of long-term projects when your interest rate, your cost of capital is at 4 or 5%. So I think it's a great opportunity.
Right. Well, sounds like you wrapped it up pretty good. There you have it. So thanks, Dave. Thanks, everyone, for tuning in, and be on the lookout for our next webinar.
Thanks,
Bye,
everybody.
everybody.